The Royal Bank of Canada is reporting profits that missed estimates. Now, this as the trading revenue plunged 93% from 1 year ago. Joining us for a look at what was behind the drop and also to talk about the bank's U.S. strategy is Barbara Stymiest. She is a group head of strategy, treasury, and corporate services at RBC. Thank you for your time today. When looking at trading revenue and this drop of 93% from a year ago, what was behind that drop?
Well, we certainly saw tough market conditions throughout our third quarter, which encompassed the months May, June, July. And you'll remember early for us in our quarter was the difficulties from a sovereign debt perspective. Our operations are now fairly evenly split between Canada, the U.S., and Europe. So it was our European operations that were impacted. We also had, though offsetting our kind of regular client trading, some fair value marks on our legacy positions, one with MBIA and an adjustment on a stable value insurance contract, a BOLI contract.
Okay.
So those two items actually impacted our trading results in an unusual way.
You mentioned tough market conditions leading to that decline in trading revenue. I want to talk about the market that exists right now with your U.S. banks. You have a number of banks in the southern part of the United States, the southeastern part of the U.S., and I know you've been in a period of reorganization for the last year plus. What is the status of that reorganization? What still needs to be done?
We have about 400 branches in the southeast part of the U.S. and as you said, we have been reorganizing, actually transforming those branches, improving the offerings to clients and working on our cost base. We have also, though, experienced the slowdown in loan demand that I think all banks in the southeast have experienced, and so we continue to look for improved results coming both from our management actions and from an improving environment. I think a higher interest rate environment, steeper yield curve will also help, certainly in terms of normal banking earnings and earnings from our investments.
Okay.
So we're looking forward to a turnaround in the future.
You have a U.S. insurance unit that was possibly going to be sold off. What's the status of that?
Well, we don't comment on rumors, but we do have a small U.S. insurance company based in the southeast as well, and we are reviewing our strategic options for that business.
Okay, I'm just looking also at your marketing plans as you are creating a partnership that's been in existence for much of the year, since January of this year, with the PGA. You're now an official patron. What does that say about your business and its marketing push in the U.S.?
Well, our largest business in the U.S. is capital markets, and our second largest business is wealth management. And both of those businesses have expanded quite a lot in the last 3-4 years. And we find that our golf sponsorships are an attractive way for us to target our client base and raise our profile in the U.S. So we have been a sponsor of the PGA event that's been held in Canada, the Canadian Open, and we have also got this new sponsorship, which you've referred to, directly with the PGA. So the investment in golf is working well, and we think our clients are getting to know us a little bit and not confusing us with another bank.
Okay, all right. That of course was very important, that not knowing exactly who you're doing business with. You know, as we're talking about doing business in Canada versus the United States, the Canadian banks relatively were unscathed by the turmoil of the last few years. A lot of people, a lot of analysts will look to the conservative nature of Canadian banks. How were your decisions different? What perhaps opportunities came your way that you said, no, not going to go there?
Well, I think one of the major differences between the Canadian banks and the U.S. banks is clearly our mortgage market. And we've had different policy that has existed for a long time, resulting same levels of home ownership, Canada versus the U.S., but we end up having a high-quality mortgage market. A lot of the mortgages stay on the bank's balance sheets here in Canada. Those that are securitized, most of the securitization is done through a government agency, the Canada Mortgage Housing, and the securitization is actually of the highest quality mortgages, and those mortgages are all guaranteed against default. And in addition, we don't let consumers leverage themselves. There are absolute limits on loan-to-value ratios, and the mortgages are all recourse.
Okay, Barbara Stymiest, thank you so much for joining us, telling us a little bit more about third quarter earnings and again, the marketing push in your U.S. banks as well. Appreciate your time, Barbara.